In total, this couple will be completely debt-free in just 12 years and 9 months. Imagine that you're 30 years old and you just purchased your first home, and you're going to use this strategy. You know that in 13 years, you will be completely debt-free without credit cards, vehicle payments, and certainly without a mortgage. That means $1580 is back into your budget every month. You can use it on entertainment, you can use it on your children's education, and you can certainly use it to build your retirement fund. See, this does require a lot of financial discipline, but in between, you can give yourself a break. When you're sending the mortgage company $1580, your original payment is only $822. That's roughly a $750 difference. That means that if you take 2 months off the plan, you instantly have $1,500 back into your budget cash, so you can take a 3-day weekend at a near water park with your family and enjoy yourselves for all of your hard work and effort. Or if you take 4 months off, you can have $3,000 instantly available so you can fly somewhere nice, a nice warm destination, and gain the benefits and the fruits of your labor. See, the idea here is that you're able to fund your vacation cash without relying on loans and credit cards. And that's the benefit of sticking with a plan like this. Sure, you may defer your plan by 3 months or 4 months, but if you do defer it by 4 months, you go from being debt-free in 12 years and 9 months to 13 years and 1 month. That's far better than the original plan that the lender set up for you of 30 years. So the difference here is having a plan versus no plan. You learn to live cash. You improve the quality of your life. You become your own safety net, and you build your own retirement fund. You've just learned how to live debt-free. Share this video with someone you know and teach them how to live debt-free.